Hello and welcome to FWTV episode 24. Today is Friday, July 23rd, 2021. I'm your host, Janie Hansen, here along with Q Lair for your weekly market update. First up, what happened in the corn market this week? We'll also cover soybeans and wheat with an emphasis on the spring wheat market, followed by a discussion on farm inputs, particularly natural gas and propane, and finally the Brazilian freezes. All right, Q, somebody took the wind out of the corn markets this week. What happened?
Well, we had our friends in China cancel a couple of boats, and I knew it was coming. It's just a matter of when, but they did that, and it was just like somebody shot their dog in the corn market. So it was they took this corn market down like 30 cents in a heartbeat, and it's really struggled ever since. It was really running back up this last week, early in the week, in sympathy with spring wheat, which just isn't giving up. Right for this week came within 1/4 cent of closing that gap that we opened up because we had a gap above and a gap below we talked about 2 weeks ago.
Yep.
And it came within 1/4 cent of filling it.
Okay, so it hasn't filled the gap
yet. It hasn't filled the gap.
Okay.
It's left it there, and we're 30 cents away from it now. So, that is not good news, especially when you have to move that much corn, that much distance to fill a 1/4 cent gap. So, I'll leave it to the technicians what that actually means. But it certainly cannot be good news. But, China has really clamped down on big speculation in the corn and soybean markets. And the hog market especially, it is just getting punished over there. So what they're doing is they're squeezing out all the speculation. And what they want is to get the corn market down. I think they're trying to talk it down so they can get more corn bought. But they're not going to do it here at this level. So, having said that, the Chinese are the masters at the long game when it comes to commodity trading, and they can play, big iron all they want because they've got the big checkbook. But they certainly took everybody to the rack this week in corn and soybeans as well. So it was an interesting week, especially in corn. And it's one of those weeks where everybody would go down to the bar and try to figure out what the hell happened. What are we going to do from here? Kind of a thing.
Yep.
Because this week was a narrative buster.
So and then soybeans, they follow suit?
They certainly did. The game is still afoot because of canola. So, it's that oil meal. You really don't have to prove your manhood any other way than trade oil meal spreads. It was up, it was down, it was all over the place. Some days it looks like we have absolutely nothing. The other days they just bury the markets. But what has happened is there's beginning to get some damage done on the charts, as I call it. And we are heading into harvest. The game has pretty much been afoot with the heat, the drought, everything else. There are very few known unknowns now, because we are definitely heading into it. If we get a wet August, it's going to be curtains for the bean market. So, that's the talk, among the big time ag Twitter, peeps. So we will see what happens in August. And, August is always the key.
Yeah, how it fills out.
They'll fill it out. But, corn, we did not put a whole lot of heat on it during the pollination period. So, the real danger we could have put the crop in is past. And that's another thing why the Chinese played their game probably was to, take a little bit of wind of our sails and, try to get some beans back with a 4 in front of them is probably what the game is looking like. But at any rate, beans are still a bit of a mystery because of canola. So, the oil seeds, we talked about this a lot. There's 11 pounds of oil in 60 pounds of bean, 60 pounds per bean. So, you've got to realize that you're drawing so much power in soybeans from that little piece of it.
Yeah.
So we will see what happens. But, the northern tier is just in big, big trouble up here. So, especially North Dakota and a bit of Montana.
So, speaking of which, let's move into spring wheat.
Oh, God. I tell you what, that has been a beast. It has moved back up over $9. It actually moved into our 3 standard deviation area.
Oh, really?
This week. So, 920 was the number. It went right through it. And of course, closed back right at $9 this week. But, we got some more hedges out up at that level. But what that means is that, this stuff isn't giving up. Canola's not giving up. It's still $900 a Canadian ton. And, everybody keeps talking, 2008, blah, 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 all this other kind of crap. But the real story is you don't have that big beast short who's made a colossal mistake.
Okay.
So, this is going to have to be market action. It's going to have to be supply demand. This is not where you got somebody by the you-know-whats. And, it's going to be just pick a number where you let them out. Mm-hmm. But, also we're coming in to this crop year. Everybody forgets we were 20-30 under Chicago wheat, which means we had just a lot of wheat. And if you remember, like one of our first things we talked about at Fish Wrap months ago was that somebody brought in 2 million bushels of wheat spring wheat to deliver in Chicago. Even though it's a bit off grade, I'd still love to have about right now.
Yeah.
But that shows you how bad it was. And so what that means is we did not come in with a weakened supply-demand structure. So we had plenty of spring wheat, obviously, and what we're doing is chewing into it. And I mean, if you want to take it to $10, it's going to cost you, to get it to $10, but it's also going to have to be in the supply-demand numbers, which we are not seeing right now.
Okay. So, any other news on wheat?
The drought continues in intensity. The 115, 116 degrees in Oregon last week, really did some damage to the subsoil, moistures and everything else, not to mention the fires that they got going out there. Montana's looking, quite a bit dry. Saskatchewan is just a disaster. And, so it's really, you got to play this game very, very delicately. And, only hedge what you really want to sell at this stage and make sure you got it before you sell it.
Yeah.
Make sure you got it before you sell it, because there are some people who've got some problems in some of the areas about some stuff that they've sold, but they certainly aren't going to get it. Mm-hmm. But, canola, who knows where the hell that thing's going? I really don't. And it seems like nobody wants to buy it at 900, but yet that's where they let people out.
So keep eyes on that.
Absolutely.
Mm-hmm. So, the higher prices in the grains this year are good for farmers' income statements, but those are starting to be countered by higher prices in the inputs as well.
Yeah.
So, we've been looking at increases in both nat gas and propane. What's going on there, and what should farmers be paying attention to on the input side? Well,
the thing is that whatever your break-even number was for 2021, you better get your pencil sharpened.
Yeah.
Because, I don't know what seed's going to cost you next year, but I can guarantee you, UAN, DAP, all the fertilizers are doubled this year. Everything that's, fertilizer is a derivative from natural gas, which is why it's so important. It's doubled this year and continues to spike. So, we've seen a bit of, run on natural gas because of the backup for the electrical systems, especially ERCOT in Texas. And we're seeing that, Biden's Keystone XL pipeline strategy and, stopping some of the fracking has really started to tighten up this market. So we've gone from, $2, $4 now in natural gas. I mean, it's not a disaster, but yet.
But that is movement.
That is quite a bit of movement. And the same goes for propane. Propane's gone from, 40, 50 cents all the way up to $1. And, it depends on if your corn's dry, then it doesn't matter coming out of the field.
Right. You can save on that LP if you don't need to dry it.
Exactly. But, it's definitely going to hurt when you get there. And, just a heads up for everybody to be thinking about this for next year. And if you do get a pullback and you can get a nice little, it won't be last year's prices, but if you can get them locked in at a reasonable breakdown from here, it may be something to kind of look at. Yeah,
and we'll be going into more detail on the future years and stuff in the Farm CFO subscriber update. So, shifting gears a little bit, what's with this coffee exploding? The prices went parabolic in the markets this week. What's going on?
Yeah, well, we had a big freeze in the Arabica area, Brazilian coffee production, and it went parabolic instantly. And we took. It's been 7 years since we had a 2 in front of coffee, put $2 a pound, and they went after it, and this thing is really bad because they think it killed a lot of young trees.
Oh.
Yeah. So what that means is, if you talk to people, it's one thing to have stuff growing on top of grass. It's another thing to have stuff growing on top of trees.
Mm-hmm. Yeah, and it's not just this year's crop. It's affecting multi-year.
Exactly. And, the projections going out. So the damage, they're starting to, haven't assessed it yet. But yet, if you were short it, you had to get out.
Yeah.
And, they went from like $1.50 to $2 in 2 sessions. I mean, just boom. Mm-hmm. And, big move. Sugar broke out on the upside too because of the sugar cane. A lot of people I talk to who are, deep tech kind of ag Twitter guys, we're talking about this solar minimum.
Oh, yeah.
That's out there. Mm-hmm. And, how that's supposed to make winters more intense. And, I mean, it's got nothing to do with this climate stuff they talk about, because the sun is the sun.
Yeah.
But yet, if we're getting this in Brazil, you better get your boots brushed up here in Blue Earth.
Yeah, get that off-season winter gear on sale.
Yeah, make sure, your One North or whatever the hell that place is, your jackets, make sure you get them all set up because it could be a brutal one this year.
Chilly.
A little chilly. But, coffee and sugar, and it shows you just how this inflation game just keeps coming at us. And, all of the geniuses at the government say that, this is transitory, which is, 3, 4, 5%. And it is clear it's not from what we can tell and see. So we shall see, but it took them years to try to get 2% inflation. All they had to do was just stop making oil.
Oh.
And oil blasts through the economy. Yeah. So, it's if oil and technology are cheaper, then you have either no inflation or a deflationary pressure on the economy. If it goes the other way, it just bursts out in all directions. Mm-hmm.
So, is there anything to be paying attention to in the upcoming week?
It's got to be canola. Mm-hmm. I mean, if canola just breaks through 1,000, just look out. Mm-hmm. And I mean, that's the thing I'm looking at right now. And corn, we're going to see the stomachs tested of the corn longs this week coming up.
Okay. So, all right. Well, any other closing thoughts?
Nope. Let's just get into next week and get this thing over with.
All right.
Get into harvest.
So that's all for this week's market update. And for those of you who are Croptimize Pro subscribers, check out the Croptimize Hedge Report for further insights on the market implications for grain sales. If you're not yet a subscriber, you can learn more and sign up at thefarmcfo.com. Thanks for tuning in, and we'll see you next week.